I'm the head of partnerships at Joyride. I'll be your master of ceremonies and somewhat lead presenter for the next 2 hours. Just before we get started, a little housekeeping. As some of you have already done so, we have a software that we're using today called Slido. We have a few polls and interactive kind of questionnaires that we're going to be doing throughout today's discussions. And we'd really just like to collect a lot of organic feedback from our audience as we go. Perfect. Today's agenda, we're going to be talking about 4 different kind of modules today. All of this is really directed from the point of view of if you were to start your own micromobility shared fleet operations, whether that is public sharing or private sharing, be in the mindset of, I want to start a fleet, what do I need to do? Some people see scooters on the road like Voy, Tier, Dot, and they think I can do that as well, but needless to say, it's not so simple. So we're going to be going over what that might mean and what stages you might need to go through if you wanted to start your own fleet, or if you're an existing operator and really wanted to scale and expand and go multinational or global. So we're going to kick off with our financing or kind of capital raise section, moving into Fleet Smarts, which is all about the vehicle hardware decision-making you should go through. Data-driven insurance, everyone's favorite topic. Who doesn't love insurance these days? And supercharging revenue, really the most dynamic avenues that you can go down when talking about designing your operational back end and how to grow your top line and reduce your bottom line. So really it's all about your gross margin. And then we're going to finish up with what we're calling a global mobility panel. We've got some really excellent speakers from a variety of little niches within this industry that we're going to have a little 20-minute Q&A at the end. So feel free to stick around for all 2 hours. We'd love that. If you have to go see another staged event or you have meetings set up, feel free to hop on out. We just ask that if you could, just maybe wait till the break points and then exit out while we're kind of having a few minutes to stretch our legs in between. Today, besides myself, I've got some of my colleagues that will be intermittently participating, either speaking or hosting panels. Ben Wedge is one of our product managers. Sophie Bellett-Cross, who you've probably seen downstairs at our booth most of the day, is our head of sales. Nick O'Sullivan, standing right back there right now, is our head of operator success. And Marcus Dahmen is one of our vehicle partner managers, has worked in the industry on the hardware side for a number of years. And those are going to be your 5 participants today. Getting it kicked off, who is Joyride? Some of you may know us as those software guys from Canada. And yeah, we are those software guys from Canada. But we're a little bit more than that. And the reason we're speaking to you today about operations, insurance, hardware, is that we've learned through our 8+ years of company operation that our customers, the software customers, have a lot of pain points with insurance, with financing, with purchasing fleets, with getting spare parts for fleets. And we become the de facto subject matter expert consultants on how they can best conduct their operations. So we thought, instead of referring people to our partners all over the globe and basically being a call center, let's kind of make this a little bit more turnkey. So for the last few years, we've been assembling a core group of subject matter experts across a number of different fields within this industry and partnering with key stakeholders across many value chains while we bring together a number of products that can really enable our operators to not have to call us every day, but have those self-service keys of success within the industry. So what we're really going to be talking about when it comes to our vehicle procurement is how you can actually get your vehicles with the capital you need, which sometimes can be harder to find in the sense of venture capital, going to the bank versus leasing. We're going to kind of migrate into how do you find 6 figures to start an insurance premium program when you only have $50,000? So all these little pain points that kind of build into what makes Joyride that turnkey software provider. And the vessel that's going to fuel the ship is the Joyride Academy. And that's really what we're here today. So we launched the Joyride Academy about 6 months ago, only for our customers online. And next week, it's going to go live to the whole world. And we really want this to be the educational tool, not about our software, but about how these operations can be conducted. And so if you got the journal outside, there was a little placard inside that has a QR code. Anyone here is welcome to try out the Joyride Academy for free for the next 2 months, if you'd so choose. If you're not a Joyride software customer, though, in 2 months, you will have to pay a hefty premium. So it's not going to be free forever. All right, so jumping right into financing 101K. This is a big market. Many of you who are in it, either as an operator, as a software provider, as the banking side, the insurance side, have seen large figures, CAGRs of 25+%, rounds being raised by operators, 10 million all the way up to 700 million euros and dollars. This is going to keep growing. We are kind of at the precipice of reaching consolidation point in the marketplace, and that's going to put pressure on a lot of firms, especially smaller firms, to find different avenues to finance their vehicles. Going to take a quick pause right now. Just take a guess, take a stab at where do you think, if you have been an operator or you aspire to be one, where do you think your primary source of capital is going to be for your first year of operation? So if you need that startup capital, if you're not bootstrapping it, where's that going to come from? Take a few minutes, a few seconds to answer that. See if our software is working right. All right, so as I've kind of hinted a few times now, securing capital is hard. If anyone who has ever pitched in front of an investor knows they're not pitching in front of one, they're pitching in front of hundreds just to get the one that can actually finance their operation. And it's all about how much cash you have on hand at every given second of every given day and watching your burn rate, so on and so forth. And keeping that positive cash flow and free cash flow is going to be a main theme throughout this entire presentation today, is vital. If you don't have cash in the bank, you can't operate. If you were trying to get market share, scale quite rapidly, you have to constantly be raising money like any other business, but especially in this one where the demands are quite high, the competition is fierce, and there's not an open market. It is very exclusive or limited to an oligopoly in a lot of different marketplaces around Europe and North America. So at this point, I want to invite up one of our kind of premier guests who, if you look at the Joyride Academy in your free time, has already got an interview that we conducted last year on our platform right now. Nadim, where's Nadim? There he is. Nadim Matuk, everybody, from Liil Ventures. Come on up here, Nadim. Actually, we can sit down for this one. We'll be... Full disclosure, Nadim has a stake in Joyride, so we will try to keep it apart from Joyride, but he knows us intimately, and we know what it is like to kind of pitch to Nadim personally. So kind of want to keep this short and sweet, but if I was a new operator, someone outside Joyride, what would you say if right now, today, in 2022, I asked you for $5 million?
Okay, so it depends on the use case. And yes, as you mentioned before, we are investors in Joyride, but we also invest in other companies in micromobility. So the spectrum and the knowledge, a little bit of our background, we are a corporate venture arm of a urban mobility corporation. So we are related also to public transportation systems. So my answer to that should be where and why.
Yeah, perfect. So I want to start a scooter sharing program here in the Netherlands. Hence, it came legal, yes, next year. And I want to plan for that starting January 1st next year. I have 100 scooters I want to launch along with maybe 200 e-bikes. And it's going to be public sharing. I mean, what kind of risks do you think you're seeing with my operation and that ask?
We will understand, the user recurrency and how it's related with the network, to be honest. I think as long as the regulations are being improved, and we are true believers that we will have some powder to put those networks working together, right? If the last mile investment thesis really works, how you will integrate with that.
Okay. Now, say we kind of get to that due diligence phase, what kind of risks from the investment standpoint is your firm looking at and will impose, in terms of milestones on my new operation? What are you guys looking for in the first 6 months or year?
Yeah, it has changed. If you asked me that question in 2017.
So perfect. What did it look like a few years ago versus now?
Yeah, I think understanding the macros, right? All the public markets are going down. There's a little bit like big reset questioning about it. But I do also believe that micromobility already surpassed that, right? We already have our reset put on 2 years ago. We already have big learnings from there. And I think it's about being hyper-local, right? Like understanding the macros to actually put in practice the micro. So I do believe that if mobility as a service systems are going to mature and are going to be a correlation between independent micromobility entities, that's something we want to pursue.
So how would this compare to if I was the CEO of Dot or Tier, Voy, Lime? Is the time past for companies to scale up to that level? Is there any VC dollars left for someone to start from the ground up and get to that point, or is that time gone?
Everything is possible. I think we need to keep our minds open. But for us, the market leader approach is not sustainable. And I think it's very evident now that multiple companies has been public and you understand the numbers. The scalability of that, you struggle, right? We believe in the numbers, and the numbers are not there. But we do have some cases of closed, isolated projects. If they are related with a public entity or transportation entity or a B2B, community that are working, that could grow. Yes, of course. But it depends on the entrepreneur.
Would you be more concerned if I came pitching an operation that was focused at public sharing in the city as I described, or if I had a vision for a resort or hotel chain of private operations? Is there one type of scheme that seems more or less risky than the other?
I think if they are standalone, there's a risk. We believe in the connectivity of multiple services. Yeah. For us, I think it's very important to understand the integrations, or at least the future of integrations, because you will struggle as a standalone solution. And we foster the entrepreneurs to create also, okay, if you are going to be on the tourism, niche, or an isolated regional approach, what will be your integration scheme for the next 2 years? Because that's where we can understand also to integrate either more micromobility options or opportunities, or create those packages that can increase their revenue, right? So if you have the density of users, you can understand or include some new revenue streams that aren't come only from operations.
In terms of kind of the metrics that you just mentioned, there's been a lot of major KPIs that people throw out here: rides per day per vehicle, number of active users, so on and so forth. But what's the truth? What do you really look at? Is it number of rides you conduct? Is it number of actual users or downloads you have on your app? What are the kind of the KPIs that really pique your interest when you're looking at the numbers?
From the OPEX, I think efficiency in operations. So locals understand very well how to collaborate. So there's a mixture. There was a trend of these big companies outsourcing their operations in order to be more effective numbers. But if you are creating or kickstarting your first micromobility project, I think engagement. That's why integrations are important for us, because you don't need to pay for marketing to acquire your users, right? Like the thesis that public transportation system organically will, connect these services, it's something that we want to validate. And that could be only created if you have a good relationship with your current entity or locality.
So if I'm an operator, I shouldn't be tunnel vision focused on just launch my market, don't have partnerships, don't have kind of any integrations. It's more of city integrations, third-party partnerships, and making sure you reach as many users as possible.
Yes.
Okay, perfect. Well, this is just a little teaser. So join the full interview on the Joyride Academy. But give it up for Nadim, everybody. Thank you. All right. So really what we kind of learned is there's high capital expenditures. We have a lot of VC-backed global players that really have the market share right now, but the landscape is not over. Like, you can still get into this if you have a vision to really connect the dots within your local market or markets. So really don't think that this vision of a micromobility operation for you, or a scaled up one, has passed. All right. The few things that we're going to really be talking about as we kind of move on is not just the purchasing with VC capital dollars, but we also want to talk about some other avenues that have really popped up over the last few years. Namely, financing, not traditional bank lending though, but B2B lending. in leasing. So the financing aspect of it, if anyone's gone to the bank with a brand new business and asked for money, a lot of times you're going to get a door shut in your face. That's because you, A, don't have any history that they can run credit on, or B, a lot of bankers in this industry really don't trust micromobility yet. It's considered a fad industry, and they don't know if it has a long-term viability. So what we've learned is that our customers are quite successful. We can underwrite them quite well because, as Nadim just mentioned, we can look at the back end and see those numbers. We know their unit economics, we know their cash flows, and we feel more confident in being able to lend to customers. And that's why over the last 7 months, Joyride has actually started doing their own in-house lending to our operators, if they so choose. Now, obviously, there's going to be higher interest rates, so there are some trade-offs with private equity and with VC dollars. You're giving up stakes of your company, but if you go kaput, that is what it is. You're not going to be on the hook for any kind of collateral. Obviously, with lending, even if it's with B2B, you have to put up a little bit here and there, and we collect some interest. So your unit economics are going to be a little bit thinner margins because your total lifespan of your vehicles, because of that overall cost, vehicle plus interest, going to be higher. But we can get you cash fast, underwritten even quicker, and more long-term viability. Whereas with leasing, with companies like Joyride, who again we'll talk about in a minute, your total cash flows can be much more streamlined by only paying a small monthly fee for the vehicles, guaranteed fleet totals and uptimes by having quality vehicles sent to you that you don't purchase and have to maintain to the same level because they are, they are maintained by the fleet owners, investors, and the subleasers. And you're really just focused on your cash flows and knowing that every so many months or years, you're going to have a fresh fleet if you so choose, and you don't have to worry about 6, 7, or 8-figure vehicle purchases, depending on your location. So what can operators do when institutional lending falls short? Again, look to your banks. If they don't want to help you out with their lower interest rates, look to your software provider or other private B2B corporations. If we can't help or you don't have enough operating history, look towards a vehicle leaser. Really look for options. The main thing that we want you to take away from this is you are not really sold with only one avenue of raising money. If you can bootstrap it, but don't put yourself out of the bank because it is a risky business. Try to diversify your funding, whether it is through your own startup capital, through private equity. If you need to take some loans out, really just be creative. That's be creative. So we really want to look at options where we as Joyride can give our customers the best access to the capital they need, whether that's our own, whether that is through our partners at companies like Joyride, or through banking partners or investment partners that we've built up over the years. One of our first customers that actually took advantage of our lending is here in Europe, over in Germany in the Frankfurt area, a company called Scotty. Unfortunately, couldn't be here today, but they have some trouble with securing vehicles because the German market has more regulations than almost anywhere in the European Union. But we came across some vehicles that we were able to sell to them, but they didn't quite have the capital to do it at the exact time they needed it. So we saw their numbers over the last year and a half. We said, your numbers look good. We feel like we can get you a decent rate and get vehicles in your hands quickly, and we can be flexible. We don't want to be stodgy and very rigid in how we conduct our underwriting, and we want to be fluid so our customers can get the vehicles they need because they can't scale up if they don't, and we're able to get them what they needed in short order. The biggest thing I do want you to kind of leave with from a margin perspective, disclosure, used to work in operations. I know what this looks like from 2018 all the way to today. If you can make it successfully, moderately successful in your first year, you maybe scratch the surface of having a 3% gross margin. If you can get to year 2, we really see where it turns around. This is when there is kind of a paradigm shift in the local user base in a market when they accept micromobility as a viable long-term transportation solution. You start seeing your early adopters increase their ridership. You start seeing new second follower users and other age and gender demographics start hopping on your devices, whether they're scooters, e-bikes, or this, that, and the other. If you really are efficient in your operations, you can see a 43% margin kind of in that second year. And if you're really hyper-focused in your third year, you're kind of going to level off at 50%. And that's where you just need to start maintaining your quality overhead and not scaling up too much on your marketing side. But the biggest thing, get past year 1. If you can get past year 1 and you're over and you're not underwater, you have a viable path to long-term success. Okay, as we just mentioned, the VC money's drying up. This is the problem we've been talking about. As you can see back in 2018, just to reiterate this, look at all those deals that were going on mostly in North America. Europe has kind of caught up, but it's stagnated. The money, the early money has flowed into the dots, the limes, the tiers. It's just not going to be there for you. So you do have to look at, there is companies like Liil Ventures that are looking at smaller operators, but look to get your operation off the ground. Look for alternative sources of funding for your fleets. It is the biggest expense you're going to have, and you need to be smart with how you get your vehicles on the road. All right, now leasing. Kind of mentioned this. I'm gonna give a little plug to our friends at Joyride. What they do, Joyride buys up fleets, and they're the global leader in this, and if you needed a fleet of, say, 200 or 300 vehicles from a Segway or an Okai or an Acton or any of the other vehicle manufacturers that have prominent sharing units on the market today, but you don't necessarily want to spend $500,000, $1 million. You really want to have that free cash flow. You can call up the guys at Joyride, pitch your idea, they will vet your market and make sure it actually makes sense. And if it does, they will lease the vehicles to you and place that fleet on the local market or a local market that they've created online. And you, me, everyone can actually invest in those scooters and have a revenue share model with individual owners. So it really democratizes the ownership and the revenue model of the entire industry. And the fleet owners actually win by getting the investment back. The operators win by not having to expend 6, 7, possibly 8 figures in vehicle purchasing. And Joyride wins by taking a little cut, so leave that where it is. Just a quick little process, as I just mentioned. They will do due diligence. They will contract with you. They'll deliver to the fleet, and then it's going to just be that recurring payment method going back, and everyone wins. Win, win, win. As I just mentioned, the operator, the owner, and Joyride split that revenue 3 ways. And every 2 to 3 years, depending on your contract, you can get a brand new fleet, and you never have to keep worrying about these recurring issues. Again, just kind of a quick breakdown. The equity versus debt versus leasing, take some pictures of this, by the way. This is kind of the pros and cons of what's out there, and really what's going to cost you as a company owner, what the costs are. Again, for equity, very high, taking parts of your company. For anyone who doesn't have a lesson in this, equity always costs more than debt. Keep that in mind. Equity costs more than debt. Okay, weighted cost of capital. Again, there's no wrong or right way to do this. There is only get yourself off the ground, get money that keeps positive cash flow free for you. So keep that free cash flow going. If you need to go with a lease, awesome. Encourage it. If you need to get some private capital, if that's the only way, get the private capital. Just make sure you have very optimized operations, which again, we're going to talk about in about an hour, and keep your fleet going. Get past year 1 and get to year 2. Continue to optimize your operations because those margins are going to be your best friends. All right, so that is the end of section 1. We're going to be starting in a few minutes talking about vehicles in a section we call Fleet Smart. So with that, I'll let everyone kind of chat, get to know your neighbor, and we'll be back in a minute.